Hey everyone, my name is Tim. Today I'm going to be going over everyone's favorite subject, taxes. Well, it's definitely not my favorite subject, but it's important, so make sure you always pay your taxes. As for this video, I'm going to be talking about taxes that you will need to pay as an investor for the stock market, real estate, or any capital asset, such as even cryptocurrency. If you liked the video, don't forget to hit the like and subscribe button down below. It does greatly help out my channel. And I will also be putting a link down below to my Discord, which is free to join. And I will have daily stock picks that will be listed there every day during the week. And so I hope to see you there. Have a great day. So this video is about taxes. So my first point is going to be a disclaimer. I am not your tax professional or tax advisor. Make sure to get your own tax professional or tax advisor to help you with your taxes in order to make sure that you are paying your taxes on your investments correctly, and that way you don't get audited. That's no fun for anyone. So, get that out of the way. For stocks, there are two main types of taxes that you would pay, and keep in mind this is only if you sell the stocks. Like if you just keep holding them, then this doesn't apply except for the dividends. You will have to pay taxes on your dividends, but those fall under long-term capital gains, not short-term. So depending on your income and tax bracket, keep that in mind. But for long-term capital gains, this is for your long-term investments. You are purchasing stocks in companies that you truly believe in, and you are intending to hold on to them for more than a year. And then if you then sell them after a year for a profit, that is considered a long-term capital gain. And so depending on your filing status and your income levels, you will be paying either 0%, 15%, or 20%. And I do have the chart here that you can look at. So if you want to pause and look at this, you can. I will go over it real fast. For the single, in order to pay zero tax on your long-term capital gains, you can make up to $40,000. In order to pay just the 15%, you would make 40,001 up to $441,450. And then your 20% tax rate will fall under $441,451 and up. So anything above that, if you're single, you'll be paying the 20% rate. If you file as head of household, you will have up to $53,600 in long-term capital gains, and you won't have to pay any taxes, at least for the federal. You might have to pay state taxes. That's up to your state. I can't tell you how the state taxes will work. You'll have to consult your tax professional for that. But for federal, you can make up to $53,600 in order to not have to pay anything on your taxes as head of household. To get to the 15% rate, it's $53,601 to $469,050. And then your 20% rate will be at the $469,051 and over is when you'll be paying that 20% rate on your long-term capital gains. Married filing jointly, you will pay 0% up to $80,000 in long-term capital gains as of 2020, which also keep that in mind. They do not have the numbers yet for 2021, but this is from 2020. And then you will pay the 15% rate at $80,001 to $496,600. And then you will be taxed at the 20% rate at anything over $496,601. Married filing separately, you'll be paying the pretty much the same amount as the single, except it is lowered a little bit at the 15 and 20% rate. So you will pay 50% at $40,001 to $248,300 instead of $441,450 like the single. And at the 20% rate, you'll be taxed at $248,301. So also you won't be taxed at the 20% rate for all of it. So for instance, you won't be taxed on anything married filing jointly up to $80,000 in long-term capital gains. If you make more than that, say you made $1 million hypothetically, then you wouldn't pay anything on the first $80,000 in long-term capital gains. You would pay 15% on the 80,001 to 496,600, and you would pay the 20% on the remainder up to the 1 million that you made in long-term capital gains. Now, for short-term capital gains, this one's more complicated, especially since the president will probably be changing this for 2021, but that hasn't been confirmed as of yet, so keep that in mind also. These numbers are not just the 3 that we saw in long-term capital gains, which, by the way, like I said before, the dividend income also falls under long-term capital gains, depending on your income and also your filing status. But for short-term capital gains, so for day traders, for options traders that do weekly options, for anyone who was doing like the GameStop or AMC, to where you were buying and selling for anything in less than a year, you would fall under short-term capital gains if you made a profit. Now again, they separate these by filing status. So for single, you go from 10% all the way to a max of 37% at more than $518,400 in short-term capital gains. Again, this is not where you pay the tax rate on all of it. You go step by step depending on how much you make. So for single, again, you can pause this and look at this chart if you want to. But for a filing status of single, you will be taxed at 10% on up to $9,875, which is the same as married filing separately. And then from $9,876 to $40,125, you'll be taxed at 12%. And then from $40,126 to $85,525, you'll be paying 22% tax. So that jumps up quite a bit. And then from $85,526 to $163,300, you'll be taxed at 24% for, again, both single and married filing separately. And then you'll be taxed at 32% from $163,301 to $207,350, 35% at $207,351 to $518,400. Now you come to the difference, like that's for single at 35%. Now for the married filing separately, it's from $207,351 to $311,025 will be paying the 35% tax. Then as of 2020, 37% tax on anything over those amounts. You do get a little bit more if you're filing as head of household or married filing jointly. I'm not going to go over those in this video, but you can see here on the chart. You can pause and take a look. For real estate, I am not a real estate investor. I am a homeowner, so I do have some tax advantages as being a homeowner, but I will link a channel to both Minority Mindset and Graham Stephan up here. They are both really good real estate investors, and I actually watch a lot of their videos, and I'm hoping to one day be a real estate investor. But right now I would rather show you their channels. That way you can watch their videos, learn from their experiences, and that way you can improve yourself and have more information according to your circumstances if you are a real estate investor. I am not yet, so I don't want to give you incorrect information. I do know there are a lot of tax advantages, so I hope you will take a look at their channels and look at those videos that they've made. Now for cryptos, like those are basically a capital asset, just like stocks and real estate. So if you sell them for a profit, if you've held them for more than a year, they will more than likely qualify as a long-term capital gain. They are still working out the jurisdictions for that, but right now it does look like it would be a long-term capital gain if you've had the crypto more than a year. If you've had it less than a year and you sell for a profit, again, it will qualify as a short-term capital gain. Keep in mind this could be incorrect at the time that you're watching this video, so make sure you check the laws and check with your tax advisor. Thank you for watching. If you made it this far, hope you found the information about the taxes helpful. If you did, don't forget to hit the like and subscribe button down below. It does greatly help out my channel. Also, the link to the Discord with my free stock picks every day will be down below in the description. Hope you all have a great day, and I hope you have good luck in the stock market.